I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CT Review. Today is November 5th, Tuesday, 2024. Hope you had a good day today. So we ended up having a bullish day. So take a look here. You'll see that when we're here, you either got a 50-50 chance of up or down, right? I was trying to get down in here, get into this level. I'm not saying that we can't do it, but it's not looking in its favor at the moment. But we are retracing back up to wipe out that liquidity from the previous couple days, plus get more back into this breakout trading levels of imbalance and so on. So that's the question here. It's like we're pretty much back to square one. When we were talking about yesterday, trying to see this unfilled. I mean, it's rare, but I mean, as far as the elections goes, if you do the past like 20 years or something, you'll see it's about a 50-50 chance that it's on election day, it's going to go bearish or it's going to go bullish. So today they decided to go bullish. As of now, right, is what I'm thinking. But same speaking, is this a lower high, right? Is this a lower high to then come and raid down? FOMC on Thursday would definitely kind of give you the direction of taking out liquidity to the bottom side here or to all this here, right? Because we got these gaps right here, right? But on the daily, if you recall, see that? Those two gaps right there? Fucking look like a black hole to me. But so in a sense, you know, it would make sense for it to come up and wipe out liquidity. And I really preferably would have liked that. But at the same time, where are the signs here? Well, for all the trend line guys, I mean, you know, this is pretty evident when you see that, right? So when you start to see a breakthrough with little candles, that's a very big sign. So I stayed up late until about 1 something in the morning and got out of the trade. You'll see. Let me go to a 5-minute here with this, and then on the 15 minutes, pretty clean too. So here, when we opened up, we gapped up, and then we came down, and we got like into 50% of that wick. See this 12 o'clock down candle? So we're getting the higher lows. They took out Friday's low, but they left that dangling carrot. So if we're gonna be bearish, we need to see it like really drop. Like it would need to really drop for it to be like for this to be into play. Again, it is back to square one. But again, take a look here. Where did the trend line go? Why didn't it show? Oh, did I delete it? So if you take a look here, you'll see, like for example, this. Like this is not what I want to see if I'm in this trade, right? Like I don't want to see this. See this momentum candle right here. This 2045. That was red flag number one. Well, actually, this was red flag number one as it stopped. It didn't continue. So what I'm looking with this sell, if it's gonna pan out, I want to see this thing. I want to see Asia really come down. You know what I'm saying? Like I want to see it really start going. I want to wake up to it down here, to be honest with you. But we're not. Number one, that's number one. Number two, when we get this big push right here, okay, it's fine, right? This is flag number two, red flag number two. But then when we come here, see when we push up again right here above this high. So this should be protected, in my opinion. Like, you know, using trend lines, that's funny. But just so you can see the logic, I want to see this kind of like stay lower high because we've been down, up, down, up. So for me, bearish. There's no reason to keep coming up here. So in that sense, here, you'll see right here, for example, how you can see this, right? This looks crazy, right? So you can see once we, well, for me, I'm sorry, not here, here. So once we busted through that level above, this is now 1:30 in the morning. I was like, nah, fuck this, done. So you got the order flow there. And then when I wake up and it's the price actions here, I'm going to go to a 5-minute real quick. You'll see we got these higher highs and higher lows. We do sweep the liquidity here, closing above though. And we're sitting at the opening gap. I mean, look at the bodies right there. Very clear. Now, where's the other red flag? I'll show you. I have to show you this on a 1 minute. Very, very, very fire shit though right here. So take a look. Right here. Look at this shit. So if you were watching live price, you would have seen this, and this was the tall tell that it was just gonna fly out. And these are rare that you get these pumps, but I mean, again, election day, they're trying to reverse back up to wipe out this liquidity to the left of the chart. That's fine, but if you take a look here, if it was gonna be more on the bearish side, and we would have like hoped for it to swing down, look at this and look at this imbalance, this 857 right here. So first of all, we come this high, which is not that great of a sign if you're bearish, first of all. But second of all, take a look here. Look at the leading up candles. Look at 925, 26, 27, 28, 29. Look at them all going above that imbalance. Especially if you take a look at, where is it? 27 and 28 and 29. See how they go above the imbalance? You can see that, right? Very clear. So it's already above it. And look at this 929. Tags it and then it closes right there. Like right there, if you've been watching price action for a long time and experience, this is not good for bears. Let's put it that way. So sure enough, it took off, right? So once it took off, what is it doing? Obviously to the left, we're looking to wipe out all these lower highs that they built. It's a low resistance run. So again, you have to know both of these options, right? Doesn't it look awkward? I mean, doesn't it look like it was manually intervented, right? But if you look here, you'll see that when we come up to these gaps. So we pop up here, we retrace back, we pretty much tag that candle, a little miniature gap right there, miniature gap, and then shoots above, and then it's support the rest of the day. So let me do it like this. I'm gonna try to make this video short here. So this is that down candle, that's support. So we're basically looking at a classic buy day. It was a great day, actually. Wasn't that bad at all. But as you see, we're digging in. We have this support from the gap. But if you didn't have the gap, the down candle is what's key here. This breakthrough, they're not interested in that. They're really trying to get to the left of the chart above. So then you see here, we pop up again. We get this nice imbalance. This is this 937. That's the first imbalance of the opening gap, of the opening, right? Price action. And then you see we dip down here. We still respecting this, right? But look at all the bodies sitting in that gap. I mean, in that imbalance. You see that? So you have to pay attention to this stuff. Then what do we get? We get this 948 just takes off. So takes off here, creates a nice imbalance here. We push up for a leg. We get a little kind of like 3 drives right there. See that? One candle down, 2 candles down, and then right here a little peak with the wick here. And then what are we doing here? So this is, so you got your pump, and if you want to write this for your notes, dude, like on a bullish day, you're looking on a bullish day. It could happen a couple of ways. Either it's gonna dump first, then it's gonna pump, and the pump is always gonna be bigger. Or in this case, if it pumps first, we're talking bullish days. If it's a pump first, then the pump will always be big, and then the retracement or the dump is a retracement, and it's shorter, and then you're gonna continue with another pump. So it's just buy, sell, buy, right? Higher high, higher low, higher high. So this is just basically the logic. But now if it's a bearish day, same story. If you want to write it down, if we're bearish and we get a pump first, then it's going to be a small pump, and then the dump's going to be big, right? Very simple. And same going. If it's bearish, if it's a bearish day and we get the dump, then we'll follow by a pump. But remember, we're going to be following again by a dump again. So sell by sell in that sense if it's bearish. So anyways, and then and for what I was trying to accomplish here, it was a little bit out of sight, a little bit difficult, only because of the fact that we're already in a discount area. Like we're pretty low here too. I mean, not low relative to what's going on like in this major leg, of course. So but as far as that support that I was talking about, I believe I talked about it last week. Did I? I think I did. I was talking about this candle right here, this October 3rd, Thursday, as probably being support, and it ended up panning out for the near time. Also, we had plenty of room here. We were sitting right here at 50% on the overbought and sold indicator. So sure enough, they shot to the overbought, right? So that's why I was like, it's a 50-50. It's okay, but guess what? You close in profit still, even if you took the trade. I don't know if you did, but just talking as far as specifically me goes, I'm not going to let a winner turn into a loser, right? Like I'm still protecting and managing risk. So that's the case. You have to be able to cut ties, and not be married, right? But anyways, back to here. You can see here the price. We come back to it as 948. So we retrace. We get this little 3-4 legs down, 3 legs drives down or whatever, and then you see we dip right in. Now they want to do it. They dip right into that. To this 948, and as you can see, when we pushed right through, why is this a logical dump or retracement? Because of all the breakout traders. Number one. Number two, we have these 3 down candles. Number 4, we also have this up candle, this 940 that's in the yellow. I dragged that out. Look, X marks the spot. You see that? So that's a support level is what I'm really trying to say. Sure enough, where did it hold? It, nice indecisive. Look at that tail. That's beautiful when it closes like that. Look at the 1102, retraces back 50% of the wick of the 1101, and then it's tagging these down candles again, right, for demand. So beautiful. Pushes up. Where's your confirmation? Now, let me be clear. Also, if you're if you're struggling, you're trying to figure out like, how do I enter? Where do I get confirmation? That's totally up to you what you use. Obviously, the more confirmations, the safer the trade is. So, for example, if you're trying to get in here, okay, great, right? If you miss this, or if this is too risky, where would be the next entry? For me, it would be this. It would be this bearish 1055 inversion right there, right? Because look how it stops on a dime right here, right? You can see the support there. Plus you're in that gap, but that's beside the point. So let's just say this wasn't enough. You're like, oh, it still could come down here. Your eyes don't see it, right? Guess what? Right here, you see, and if you wanted to make it a model where you're saying, okay, well, I'm getting a retracement, I'm going to buy the higher low, but I want to wait for order flow to flow up because I know that we still have an expansion in the day, right? As you can see, the classic buy day consolidation here, push up, you get your first phase, and then you get your second phase, right? So if you know that this is a first phase and you're going to continue to a second phase and you're holding and you're buying this higher low to higher high, and then let's just say you bust above this high and you wait for 3 drives, 1, 2, 3, right? So just getting you in the vicinity, and also to the left of the chart, by the way. I'm going to go in the 15-minute just to kind of zoom out a little bit. You see how the price, look where the price went. You see how the price is here? Look to the left, look to the right of the chart. You see how we smacked that area? What's right there? I mean, we can refine this to a 5-minute, but I don't need to. But you see here, you see the breakout traders here. You see how this level's here. See how we bust through, and then breakout traders and lazy traders, they're just pushing sell here, right? Or here, and that's why we come back up to do that. That's why you might be asking, well, you remember you mentioned this low and it went to the tick and I took this sell. Yeah. So there's 2 things that could happen with this. This could be a support resistance situation for sure, and then break down lower. But we never got that lower low, remember? And I made it very clear yesterday, we didn't get that lower low. Plus we didn't break that level on Nvidia as an example. I was very clear about I wanted to see it bust through. Guess what? It didn't. It gapped up. So I understood. I saw this, right? So I understood this, that this could fail, right? So anyways, but look to the left here, the breakout traders. Now you're wondering, well, man, dude, I mean, this is so complicating. I want to be a breakout trader. Let me tell you something. Breakout traders make a lot of money. Those people, they have the simplest strategy and it works. But for me, you don't want to hold. You don't want to be holding for dear life with that kind of strategy, right? Because obviously we come back and attack it. So that's why I maneuver the way I maneuver. Meaning that's why I knew that it's a very high possibility to come back up higher because of the breakout traders. But like if if you're a breakout trader, well, just also remember that you coming back up to attack yourself, if that all makes sense, right? So yeah, no, I mean, listen, I have nothing against breakout traders and momentum artists. I mean, it's an easy strategy and it works very well. But the price will come back to it, and that's kind of like what I'm trying to mention here, right? So we push up, we retrace back, and anyways, so again, if you didn't get here, you didn't get in here. Well, guess what? If you understand we're in an expansion, and you look at this 1107, we come and we tag. Look how we tag it. Beautiful, dude. So that's an entry right there. So someone is literally waiting for this to happen, for this inversion to happen, and then this imbalance. So that's 3 confirmations in my book, right? That now you entered here, and your trade could, if you're struggling, your trade can be from here just to this fucking high. Is that points? Yeah, it is. Let's take a look. How many points is this? 275 and 320. So that's almost 50 points right there, right? 50 points is a lot. Dude, if you did 50 points a day, I mean, you don't need to work again, right? So that's just a simple logic here. It's a model if you're looking at it, but it's just, we're trying to have the understanding here. But guess what? Here, if I go to a 5-minute, you'll see it more clear. But you can see then we push up, we go above, we retrace back. Nice imbalance right there, 1130. Mark your chart. Now, you're like, well, what about this one? Well, it's not probable when you have one below it, right? Generally speaking, okay? Because this is also a support. If I was to copy this, see if I could do that real quick. This is also a support, okay? Because this is a support block right there. You got a low, you got a high, you got a lower low, and then we bust through it. We come back above, and you can see the body sitting inside of it. Look at that imbalance is coupled with that level. So this is the understanding. Oh yeah, we're gone. Yeah, they're doing it now. I knew it. No problem. Anyways, what do we do? We push up, we retrace back into that imbalance. All right, this is at 1153. You got these 2 down candles as well. So, try to make this short, man. Damn. But I'm not trying to think about it. I'm trying to move it quick. So you have that right there, coupled with that last down candle as well. Even if I drag this out here, you got that level. And then if I drag this here, you will see the same story. We got the 2 down candles. We got the imbalance. Beautiful, 50% tags. Finale here. So pretty much drive 1, drive 2, drive 3, right? And then guess what happens? You get a retracement, and that's a beautiful classic buy day. Let me go back to here. So guess what here? So then we get this big push, right? Which is what, the 1214. So 1214 bullish imbalance. You see we're playing around here, and then we dip below it. We come right to it. I mean, there's a gap right there as well. You can see this, right? You can see that, right? See that little gap right there in between 110 and 111, plus that 50%. Boom, it shoots down. Where do you think this is going when they're selling down? We're coming down to wipe out all the people who bought from here, because these are the late traders, right? You got to have balls to be down here. You got to know what you're doing to be down here. They are the ones with their position down here as well, right? So, but they're getting all these guys here. Again, if you pushed by here through a breakout trade and you held it, did you get profit? Sure. But you better take that profit, because we're going to come back down. So could you counter trend this? Sure. But anyways, as you see here, get this failed bearish inversion. All right. Holding, suspectly holding, and then raise it, right? All right, now we're in oversold here. Beautiful, and then goes off for the buy. So let me see. Let me go to this just directly here. Also, that buy I was talking about, you can see that Dow had already went down, was pushing down for a lower low, and then higher highs with S&P and NAS. And then once we made that retracement back that I was talking about, you see we have lower lows here, and then we had higher lows, didn't we? Yeah, we had higher lows here, pretty much. And then let me actually go to a 5 minute, because I wanted to go to a 5 minute here. And then again, you'll see, take a look at the 5 minute, very, very revealing. You'll see that this push up candle, you see how this candle, this down candle, dips in very slightly. That is a signature of the algorithm. They just want to tap that imbalance and take off. And then sitting in the middle of the cluster of these gaps. But take a look, then we break off. See, we break off from that down candle. We break through. All right, and then what do? Obviously, we come right back down. Take a look. If I was to, I wouldn't say refine, but look on the open here of this candle. Bam. So you have the breakout level, and it comes right back. And this down candle is as support as well. So in reality, this is your pump, your dump, light. So higher high, higher low, higher high, higher low, and then we just made a new high right there. So but right here you can see, I mean, I didn't mark it on the 5 minute, but if you want to keep it more simple, you're gonna have to deal with Nasdaq's wicks. So, but and generally speaking, you have this down candle with the imbalance coupled together, right? But anyways, boom, pushes up and so on. So and you can see the drives here very clear. 1, 2, 3, right? And then you get a couple legs and a couple drives down. Manipulation leg here takes off. But so when I was mentioning all that, I was mentioning this. This was when I said a couple legs. No, not a couple legs. This initial buy here. So when we went with the first leg and then we retraced, here was your lower lows on Nasdaq, and you had higher lows here. So this 11 o'clock would have been a beautiful buy because it's also in the macro time. I'm talking about this whole scenario that we were here on the 1 minute. That's what explaining that, right? And then if you take a look here, you'll see that we pushed up here. We had a divergence here as well on Nasdaq for so divergence to divergence. I mentioned this yesterday, right? You can see it here panning out. We had lower highs here. We did not take out that high. And then we had higher highs here with S&P and Dow. That was a nice moment for it to retrace and sell back off. And then guess what? Well, here you had lower lows here with Nas, and then higher lows here with S&P and Dow. And that would have been the beautiful buy here, which is now the power hour at 3 o'clock. You got also time in the factor. So you have 11 here. This is a key time here. Over here, not so much, but you had the 1250 right here. That's another key time. And then over here, it is the open of the PM session, but it's not really the time. This is more of a signal and a time that's involved here. Sure enough, we just shot up. So that being all said here, you see dollar is coming back down. So they didn't push up here. That was also another factor in this cards. And I was mentioning, it looks like it was going to push up. I thought they were going to use this as a temporary support. But take a look here on the overbought. There's a lot of things I didn't mention yesterday, but it's not easy to do that, obviously. But as you can see here, we had the overbought here on the daily for dollar, and wow, we're coming down here. So the cards were all aligning for the buy, right? And anyways, what else was I gonna say here? And then as you can see, this was the buy. This was the reaction here. You had this raid on liquidity already on Dow, and S&P. Nas just pulled the rug from me. They did a little trick. But this made sense here. If it was gonna be really bullish, I would have expected lower, but that's it. I think this is it. I really don't see us coming back down here. I think the rest of the year is just going to be floating up. That's what I really think. Because I looked at the 15-year data, and I also was mentioning yesterday that the 15-year data shows a retracement, a real quick retracement in the beginning of the November, which is right here. So this would be technically the push up and the retracement, and then it buys back. So Hey, can you see it now? Can you see how it's? Can you see how it's like manufactured right here? You can see that, right? You see that little break? See that? But yeah, man. What's it called? Real dirty how they didn't take that low. Look at that. Oh my god. I mean, you're gonna have to have a massive candle down for it to break these lows right now. Is it out of the cards? I wouldn't say it is, but at the same speaking, I don't see it happening. I don't. Let me look at the data real quick. Yeah, I just don't see it happening until like the closer to the end of the month. If it's on the 5 year situation where we're really volatile, um, but yeah, now that I'm looking at it more clearly, we could get. I'm gonna draw it now. I might as well, but we might get something like this, where let me see. Depending on what really pans out, this is actually looking like the 30 year, the 15 year too. Really, oh no, I'm in the wrong month. Hold on. Ugh. And this is why people don't really generally want to trade the holidays in the first January of the year. But just give me a second. Well, depending on if we push up really straight up, you know what I'm saying? If we push up, then okay, cool. Then we could possibly do something like this. Okay? And then kind of like go one more time up, right? But if it doesn't seem to go that high, then I could say that from where we just came from, we could do this. We could do this. We could do this from here and then bounce up. Whoop. Or they actually do sweep, right? So however you look at it, it's not gonna. I don't think this is gonna be a pretty month. That's for sure. So we'll see what happens. But I feel like I'm missing something here. As you see, breakout levels right there. See that? This is Dow. This is S&P. Breakout levels there. It makes sense to come back. Just for us, the same story. If when we're coming back here to come right through that low right there of October 29 Tuesday, and then you can see that little piece of liquidity right there. Plus, we got the gaps I mentioned already. But coming up to here at 50% of this complete range, I'm gonna just take this right now. I'm gonna just borrow this. But that also we're knocking on it. So getting back to this gap right here, this previous week gap makes a lot of sense to me. Plus that taking that liquidity out. So and that's just for now. So day by day, it's I mean, we're back to bullish. I mean, this was a real key situation here, because if it had went lower, we could have had a shift. But in reality, we just swiped that liquidity, and we're back up. So I mean, at the end of the day, we're still bullish. So gun on my head, that should have been the decision to make of buying down here. Because when I was down here, I was like, well, it's very, in my experience, it's very possible, very very highly likely to come down here. But that's what I was gonna say. The exhaustion levels. See. Look at the 4 hour. Look at all these wicks. Look at all the bodies. Look at the bodies. That was the other thing I wanted to mention. Plus, if it was on the 1 hour too, you can see the bodies here. You see the wicking. You see the exhaustion there. That was another big red flag for me as well. So, again, we should have just kind of rolled over, and we didn't get that. So, you got to be able to be flexible. And if you're saying how do I be flexible? Well, I just told you about like this scenario right here, right? Like when you're watching this lead up, okay, even if you missed it here, if you didn't buy this and you missed it up, that's fine. Let me go back to 1 minute. You can just wait for a nice trade. You can there's a trade every day. I don't give a shit what day it is. If there's a fucking war going on, it doesn't really matter. There's always a trade every day. It's just not going to be as easy as you would like it to be, obviously. But this right here to buy here, or this right here to sell here, or this right here to buy here, right? Especially here, right? Is nice. And then with this right here, this sell right here, right? And then obviously also this buy right here. So you pick your poison. Where would you have been? Where could you have caught a trade, right? Opening range gap is still empty here, which is also very suspect. But when it's really bullish, that's what you'll expect, right? So, again, this is just not ideal. It's not an ideal time. So we got the elections will be going on all day. This was a pretty smooth day, but Thursday's going to be reckless. We'll see how this goes, but at the end of the day, when I was mentioning what would I like to see happen, I would have just liked to have bought right up. But this was me just being logical and seeing if they would take this. I was hoping that they would take this before. Like I wanted to see like a big dump. Like, or Asia already pushed it down. Like I'm here, and then 9:30 whatever, or 8:30, pushes it down, grabs it, and then pushes up. But Nasdaq didn't get that. Technically, S&P did do that, but Dow was really the Dow was really on point. Um, I know that sounds funny that I'm saying that now, but it was. See how we dipped right into that imbalance right there on the daily. That was all that was needed. So, all right, 31 minutes again, and I don't think I need to mention anything else now. And then I also mentioned that gap. I'm sorry, that high. No wick on there. Remember that I said mentioned that too. That looked really suspect. That sucked for the trade. Sure enough, take a look. So all these things are red flags. Now this is starting to look really bullish, but again, we would have to get a massive candle to come down. Like it would have to, and it's possible. Where again, this little channel here, this bear. Some people call this a bear flag. It's very possible that we break through and then come for again. So it's not out the cards, but we are back to 50-50 again. But there, I don't know what else I could tell you guys. You guys take care. Hope this helped. God bless.